Again, everyone, it's Vince Four from TradeWinds.com, and this is our update for August 6th, 2017. Let's take a quick look at how the markets finished off on Friday. Well, we saw another fresh new high for the Dow. It was up 66 points. You know, from the very start of the day, we had a very positive jobs number before the market even opened. It came in at 209,000 new jobs compared to the expected number, which was 183,000 jobs. So that set the tone for the day, and overall we had another very positive day. The S&P 500 was up 5 points, and looks like it's on the brink here of breaking out to new highs. It's been taking a break for the last week or so, but we still have nice solid momentum to the upside intact. The the Nasdaq was up 11 points, while the Russell small caps were also up about 7 points. TLT pulled back, but you can see here that it was much lower earlier in the session and then made most of that back, while gold suffered a little. It was down about 10 points, and crude had another decent day, up 1.1%. Now, when the markets are at these highs, at some point it is going to turn around and at least pull back slightly. When that happens, most often what you will see is a mixed picture amongst different time frames. So I want to talk about multiple time frames today, and I'm going to use Gilead here as an example. Let me retype that in. GILD is the symbol, and if you look at this on a daily time frame, we have very strong momentum to the upside. We had a nice pullback there and got a bounce. Now we've got another nice pullback, and we could get a bounce here any day, which would trigger a long position. But if we look at the weekly time frame, you know, we have flat momentum at best here, and yes, we've moved above that moving average, but we also have a bearish engulfing setup right in here, so that's not very positive, is it? And now if we look at the monthly time frame, now here, you know, it looks like the complete opposite. Not only do we have strong downward momentum, but we've had a nice orderly retracement into there and could be getting a signal for a short trade at any time. So when all three time frames are not aligned, okay, and it doesn't matter whether you're using daily, weekly, or monthly, or you're using, say, the 5-minute, the 15-minute, and the hourly, but you should always, whatever time frame you're trading with, you should always look at two time frames that are slightly higher than that and make sure that they're all aligned. In other words, they all have a trend in the same direction and momentum, or that slope and that 20-period moving average in the same direction. When it's mixed like that amongst time frames, it's just a much riskier scenario, and your likelihood of success is a lot less. So always try to find those plays that are aligned amongst three time frames. Now, coming up this week, not a crazy week for news, but we do have some decent reports. On Monday, we have the labor market conditions report, which will be important, and consumer credit. Tuesday, Redbook and JOLTS. Wednesday, the MBA mortgage apps and wholesale trade numbers. Thursday, jobless claims, PPI and money supply. And Friday, we have the consumer price index and the Baker Hughes rig count. That's about it for now. Enjoy the rest of your day, and we will see you on our next update.